Yesterday, I did the interview with Al from Blue Water, and we talked about uh, the synergies between Blue Water acquisition and Voxtur, and it was eye-opening for me to hear his thoughts on how Blue Water was going to drive the adoption for AOL. But then, right after the call, I received a phone call from a friend of mine who is a smart investor, and he said, "Great interview, but I couldn't understand anything." So I thought I would do another video and have Colin come on because I like how he explains things. So if my friend felt like he had a hard time following what Al was talking about, I thought it would be a good idea to have Colin maybe take it down to the basics and talk to us in a way that we can understand. So, Colin, thanks for doing this.
It's my pleasure. Thanks for having me on.
So, I assume you listened to my interview with Al, and I guess two main points that I would like to discuss with you is the refinancing part with AOL and then the manufacturing of the mortgage. So, can we start maybe with the refinancing part, how you understand it?
Yeah. So, I think at the, pardon me, as interest rates move up and as interest rates move down, with regards to the MSR, as interest rates go up, the risk of getting someone refinancing or prepaying a mortgage and having the MSR be cut short, that's the biggest risk, the refi or the prepayment. So as interest rates go up, the chances of somebody refinancing that loan or that mortgage goes down significantly. And so one of the things that is important is in part of the analytics package that BW does, Blue Water, is they are able to help manage the risk and the profile of being able to reduce the cost of the refinancing so that you can do a refinancing call and make it useful for the lender. And the term that they use, and some of these terms are new to me. I mean, I understand them in broad strokes, but the concept of recapture is a whole industry term. And so as the interest rates go down, if your cost to refinance is materially lower than your competitor, then you're able to make an offer to the lender, to the borrower, sooner and make it more financially incentivized for them to do that. And therefore, you have a recapture advantage over your competitors. And so, one of the things, and thanks for setting up that call with Al, because we had a very useful, though very short call. This secondary market and the execution of AOL through the secondary market, I think, is going to be what really has a massive impact, because it's the wallet of the industry, the secondary market. They're going to drive that. And if you are able to increase the value of your MSR by being able to recapture them faster than your competitors by using AOL. So all of the good bits that Al spoke about in your interview yesterday, those are fairly easy. More information, faster execution, more accurate, and cheaper execution. That's all easily understood. Some of these elements of how the cross-selling, some of the sectors, some of the sections of certain types of trades will require a whole bunch of valuation done. But this idea of the MSRs and the recapture rate. So right now, interest rates are likely to continue up for a period of time, but that will not continue forever. And so being able to constantly recapture that mortgage and refinance that mortgage on the way down so that you continually extend that MSR for that loan or reset and recapture, that allows the investor to have greater certitude and greater value for that MSR when they're buying.
So
So, and
let's use this example of let's say there's a mortgage loan at 6%, okay,
yeah, yep,
and then the rates go to 5.5, right?
sure.
So so there's obviously a cost savings for the borrower. So if let's say that cost saving for the borrower is in the amount of, let me just say, 3,000, but the cost of doing refinancing is 5,000, the borrower is not going to refinance. But now what you're saying is that now with the usage of AOL, you can take that cost of refinancing from 5,000 to take it to maybe to 1,000, and now you can call the borrower, you can say, hey, it makes sense for you to refinance because you can get, you know, $4,000 or $5,000 of savings, and it's only going to cost you 1,000. And this wouldn't be possible without the AOL. So what you're saying is that the owner of that MSR, mortgage servicing rights, you can refinance that loan and you get to keep that asset, which is MSR.
So I think there's two elements that need to be. So in general, yes, you're correct. By using AOL, the cost is reduced, and therefore you can provide a greater offer. But what's more interesting is in the example of the recapture concept, is that it's the lender who is paying the title insurance. That's the critical feature. And so two things can happen if you have a lower cost. Number one is, let's say your cost is much. Let's use your 5,000, 1,000 example, and it goes to. Did you say four? You went from 6 to 5.5. I think you said. Is that what you were using?
Yeah.
What the other element that you're able to do is, one is maybe you don't have to wait till 5.5. That big a 50 basis points movement. Maybe you only have to wait till 475 because of the cost, depending on the size of the mortgage, obviously. But more importantly is you're able to then say, hey, our competitors are going to offer you 475. 450. We can offer you 5.35. So if they're charging you 5.5 and we can charge you 5.35, well, maybe that makes much more sense. And so it's not just that you could potentially do it at smaller shifts in the mortgage rate or drops in the mortgage rate, but you have the ability to provide a much more competitive refinance price. So
And what about so if you can use the AOL to protect your MSRs, right? Because you have the lowest cost. What about you? If MSRs are so valuable, what about you saying, let's say there's a bank, I don't know, Wells Fargo or JP Morgan or whatever, and they don't use AOLs. You can literally have ads on the radio, or you can call them up and you can reach out to their clients and say, well, Wells Fargo or JP Morgan cannot refi for you because their costs are too high, but we can because we were using AOL. So you can literally go out and steal assets from all the other players that don't use AOL and literally forcing them to use AOL. Otherwise, somebody else is going to eat their lunch.
Yeah, so the answer is yes. It provides you with a competitive advantage. But because it's coming from this recapture area, and it's the investors saying, listen, we want you to, these recapture companies, because it's the investor, they say, listen, we want to make better rate of return. That's primarily what they care about. In fact, that's the only thing they care about. So therefore, they're going to say, you're using AOL because that's the competitive advantage for us to make sure that we can continually recapture and we're more competitive than the other investors. So it's a really interesting element of this BW, that this BW in a hyper competitive environment, and with the ability to increase yield and increase returns by using AOL as a tool to ensure that they have a material competitive advantage. One of the things like UWM basically came out with this self-insured product. Basically it's not, as I understand it, it's not been approved by Fannie or Freddie, so it's not agency approved. It will not be able to follow their mortgages into the secondary market.
It's also AOL. They're using AOL, but it's not our AOL. It's AOL.
Yeah, it's AOL in as much as it's an attorney opinion letter, but it's not a Voxtur AOL, because Voxtur AOL means that the AOL actually travels with the loan product through the life cycle of that loan product, and that's why. And so it will not be the fungibility of that their AOL. Theirs is a custom, only for themselves, only for their internal product. What I think it's going to do is make them choke on their own balance sheet in a quarter or two, because they're not going to be able to sell those products into the secondary market, number one. What I also think that's going to do is it's going to drive clients, lenders to Voxtur for the Voxtur AOL product, because they need to offer something. UWM ran ahead. They're a very aggressive group. I think it's smart short term. I think long term it causes some problems. I don't think it's going to be able to be sold and used in the secondary market. So that UWM move, I think, actually helps Voxtur at the origination side. There's some concepts, also where potentially the lenders start paying for the title insurance because the cost is so much lower, and maybe they price in a little bit of an increase, but it means that at the front end, the closing costs in terms of actual cash outlaid is reduced materially. So I think that this is a very interesting. So first off, I think the investors in the secondary market are going to, and with the recapture capabilities, are going to drive the adoption of AOL in a way that I didn't originally envisage. I think with the
explain it a little bit more, because Al was talking about two things mainly about AOL: the refinancing part, and then the manufacturing cost on the origination side. How the investors are going to drive demand. They're going to demand AOL to be on the origination side. Can you explain it in simple terms?
Well, I think the essence of it is that if you are able to say, we the lender are going to pay for the title, therefore we're going to increase the cost of your interest rate by a little bit, or some amount, what I don't know what the amount will be, then what it looks like is the value then been moved into the loan itself, and therefore the interest rates are higher, and therefore it's a way for them to have a higher yielding product. And that might be what they're looking at, because they're going to say, look, at the end of the day, all things being equal, if one had a super high manufacturing cost and that value got thrown over to the title insurance company, well, now you've lost the value of the mortgage, right? Because you haven't incorporated that manufacturing cost spread into the mortgage. And so in the secondary market, I think what may happen is that the title insurance, because it increases the manufacturing cost and siphons dollars out of the lending product, aka the mortgage, what will happen is in the secondary market, you're going to have a hamstrung mortgage, because you have thrown a lot of value out the window by not using a cheaper manufacturing tool, aka AOL. Therefore, you're going to get less. The originators who want to sell their product into the secondary market haven't been able to increase their interest rate a bit and bring on and take that spread up front. And therefore, you're going to have a cheaper priced mortgage into the secondary market. And so I think it's not so much a forcing as the market dynamics are going to say, look, why would I pay you these AOL manufactured mortgage? Those interest rates are higher. I'm going to pay the same yield. Therefore, the face value of your mortgage goes down to maintain the same yield as an AOL manufactured mortgage. So that's how I see that the secondary market is going to actually dictate the need to use AOL on those where it can be used, because the interest rate will be higher and it'll be a more attractive product in the secondary market. And those that haven't been manufactured with AOL and are using traditional title, well, the cost of manufacturing is going to be so much higher, and therefore the originators are going to say, listen, we're losing money by using this AOL product, not using AOL on the origination, because we're getting a much lower yield when we sell into the secondary.
You know, I was talking to an investor, and there was a rumor that one of the chairman or CEOs of a big title company hates Voxtur because of the AOL, and now it becomes more clearer and clearer why they hate it, because their gravy train is going to be impacted significantly here.
Well, I think the fact that this is going to be pushed from such an efficient section of the marketplace, aka the secondary market, and there's so many big dollar investors that are going to say, listen, this is a yield thing. If you don't use this product, we're not, you're gonna lose, because you're going to get punished by the marketplace because you're not able to provide yield. I just think that this secondary market element and the fact what it's going to do to the secondary market, both for recapture, but also if you have too high a manufacturing cost, you're going to then the originators who are going to sell their portfolios into the secondary market, if their manufacturing costs, like whether you're making a chair or making a light bulb or making a toothbrush or a car, if your manufacturing costs are too high and you have to compete with people at the same price, then what it does is it squeezes your margins. And so the margins are going to be compressed for the originators if they don't use AOL. That's where I think the brilliance of this whole thing comes through. That really, wasn't clear to me, partly because you have to understand who is paying for these things. And when you understand that in the recapture market, that's being paid for by the lender, that changes all the dynamics. And that means that there's going to be, and if your manufacturing costs are too high in the front end, and because now that I understand that there's going to be the ability to tick up your interest rate a bit on the mortgage if you're paying if they pay for the if basically the lender pays for the title, then I think that now you have a massively competitive, a more competitive product in the secondary market, because you're going to get a much higher price for your product and you're going to increase your margin spread. And that's why I think that this AOL now makes way more sense. And this Voxtur makes way more sense, because the cost of manufacturing a mortgage using a traditional title, and you're not able to capture that as the lender into your product, and then you go to sell it, you're just getting your margins compressed. And that's why the lenders, the investors, through just normal market dynamics, are basically going to be able to say, look, if you don't have AOL being used, you're going to get punished on the pricing of your product because you weren't able to capture some of that title. If you prepay with an AOL, which is a much lower cost, the lender does it, but you incorporate that yield into the mortgage. On the secondary market, you're getting a higher price.
Okay, perfect. Well, thank you for taking the time to explaining this to us.
Yeah, no problem. My pleasure.